Ladies and gentlemen, good day and welcome to the Suprajit Engineering Limited Q4 FY22 earnings conference call hosted by Anand Rathi Share and Stock Brokers. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Mr. Vijay Sarthi from Anand Rathi Share and Stock Brokers. Thank you, and over to you, sir.
Thanks, Shrutuja. Morning all. On behalf of Anand Rathi, I welcome you all to the fourth quarter and full year conference call of Suprajit Engineering. From the management side, we have Mr. Ajit Kumar Rai, founder and chairman, Mr. N.S. Mohan, MD and Group CEO, Mr. Akhilesh Rai, Director and Chief Strategy Officer, and Mr. Medappa, the CFO and Company Secretary. As always, we will start with the brief about the results, and then we will follow it up with Q&A. Thank you, and over to you, Mr. Ajit.
Yeah, thank you, Vijay, and good morning to you all. Welcome to this results Concall for the fourth quarter as well as the annual results of Suprajit Engineering. I would like to thank Anand Rathi for hosting this for Suprajit. I would, as usual, start with our team to make a brief comments on the year's performance, and then I'll conclude with my few comments, and then we will have the question and answer. With that, I will hand over to Mohan to start his brief on the operational performance of the group overall. Mohan?
Thank you. Very good morning to everybody. What I'll do is, as usual, I'll give you a kind of a general overview of the business. Then I'll quickly move on to give you an update on our divisions. First of all, as you are all aware, the chip shortage woes continues, and there has also been a strong uptick in the commodity prices. So overall, supply chain area continues to be a challenge. There's also container and shipping costs being high, and this also adds in terms of the uncertainties that have built in and the delays that are happening in shipments. On the domestic front, the entry two-wheeler segment is extremely tepid, and therefore it has got some amount of bearing. Well, despite all these kind of headwinds that we have at Suprajit, I think we have done well on the domestic front. And the US market has shown some growth. EU market has been affected both from supply chain, Ukraine, and also the demand issues. So there is a three-pronged, I would say, problem at EU. Now let me get into the individual divisions. Let me start with SENA, or Suprajit Engineering Non-Automotive, which is Westcon and our Unit 9. Like I mentioned, we have good market presence in US market. US market is doing good. We have a strong order book, and the issue there has been more a supply chain issue, and we have had order backlog with our customers. Labor availability at our Wichita and Juarez plants have also added to the complex, what I would say, resource management. However, the order book is pretty good. We have been able to successfully claw back on some of the cost overruns that we have had. And with some of the customers, we have already got the price increase, and with some, we are still negotiating. So that gives you a kind of an update on SENA, and I will move to our automotive exports. Here, like I was telling, there was a huge amount of uncertainty in the European region, and from all our major customers, both OEM and Tier 1s, primarily because of the Ukrainian war and its associated fallouts, what I would say. But mainly we did better due to our new programs which we had won, which had started getting delivered. But obviously the volumes were not yet to the levels that we expected. There have been inventory management challenges between our Slovenia warehouse and our plant Suprajit Automotive at Domblatura. But having said that, I would say that we have maintained that track record as a reliable vendor to all our customers in the EU. and we haven't had any issues in making supplies to them. On the pricing front, we got some price increases with some of the tier 1 vendors, tier 1 customers, and we are also in discussion and negotiation with some of the major OEMs. It is taking time, but I'm confident that we are seeing the light at the end of the tunnel. We should be able to wrap it up in this quarter. Moving on to Phoenix Lamps division, this was the most affected division in our last year, and more so in the last quarter of the year. However, we still managed a growth in the revenue, but at the price of profitability. If I remember right, I had mentioned this, that due to certain strategic reasons, we did not pass on the price to the market in the previous quarter when I was talking in the last quarter. However, now that it is on the agenda, we have already raised the prices in the Indian aftermarket in this quarter. We have also got certain price increases from some of the OEMs and some of the tier 1s, and with the others, the negotiations are still on. Moving on to Phoenix Lamps, but aftermarket of Phoenix Lamps, this continues to be our mainstay business, and it has shown, I would say, very good traction. If I can recollect, what was at around 60% contribution to our domestic sales 5 years back, now has become about 75% of our sales. With the advent of LED into the OEMs, I would say that this was expected and it is happening as we had planned and expected. Our drop-in LED solution has also been very well accepted in the aftermarket, and it has got very good traction there. Very specifically on PLD, the commodity prices are still not benign. The increases are very steep, and we are testing the price elasticity in the marketplace for our products. So we will see to what extent we should be able to move our prices up. Lux Light and Trifa continues to have a headwind, and there again we have asked for price increases with our customers. So with that, I move on to the domestic cable division. Domestic cable division continues on a path of good profitability and also with reasonably good growth in what I would call it as a tepid market. This has been primarily due to our good product mix, strong aftermarket, and also growth with certain customers and new added programs. Just to add to that, our aftermarket sales also grew very smartly in our cable division. So that completes all the updates on the divisions. Now I'll just give a very quick update on what's happening at our technology center. The work here has been extremely good, and we have come out with products that interest the market. We have got significant interest in our digital and electronic space, and also for our braking products. As you would notice that both electronics area and braking products that we are looking at are powertrain agnostic. Therefore, that is where we are focusing on. And our strategy to be growing beyond cable, I would say, is silently taking shape within Suprajit. So moving on to the investments, board has approved our plan to invest in electronics. So now a new SMT line with new digital cluster assembly and e-throttle control lines are being invested in, and we will be commissioning it in July. We are on track with our expansion at Narsapura. This is basically to serve a customer with additional lines. And we are also on track with our what we call it as aftermarket fulfillment center at Bomsandra. Last year we had made some amount of capacity enhancement at Phoenix, but now with the completion of that additional capacity at Phoenix, we have kept the capex at a very, very minimal level at Phoenix. And in the automotive cable division and also in the domestic cable division, our journey on automation and also the introduction of Industry 4.0 and digitization continues. So with this, I complete my update. I hand it over.
Thank you, Mohan. Akhilesh, will you give a quick update on LDC?
Yeah, sure. Good morning, everyone. As you know, on 6th April, Suprajit successfully closed the acquisition of Kongsberg's light-duty cable division. Of course, LDC has been facing similar global headwinds, both in terms of commodity price and slightly muted demand, and customer price increases will play an important role this year. The China plant has also had to run at reduced capacity during the lockdowns in Shanghai, but confident that there will be a strong rebound with a lot of pent-up demand seen from customers. The immediate finance and IT integration of LDC is going well and should be completed on time. We expect all key IT systems to be integrated into Suprajit in the first half of this year. Further, we have also kicked off longer-term integration projects and called it Project Max. Across all departments, this will help extract synergies between LDC and Suprajit. This should bring a strong focus to the LDC organization and business, alignment with the Suprajit way, and opportunities to better serve our global customers. All customers of LDC are working closely with Suprajit, and we're happy that they have clearly seen Suprajit now as a preferred global control cable supplier, which is one of those key goals that we were looking at when we decided to acquire this company. So with that, I'll hand it back to you, Chairman.
Thank you, Akhilesh. Medappa?
Yeah, good morning. Good morning, everyone. We announced the financial results for the year ended 31st March 2022 yesterday. The consolidated revenue, we have recorded a growth of 12% with the 1,840 crores for the year against 1,641 for the previous year. And consolidated EBITDA was 260 crores as against 237 crores for the previous year, recording growth of 10%. And the standalone revenue was 1,271 crores against 1,112 crores with a growth of 14%. The standalone operation EBITDA was 213 crores against 181 crores, recorded a growth of 18%. The overall group debt level was 312 crores. It's reduced in fact from 327 crores from the previous year. And we have a cash balance of 261 crores invested in the form of mutual funds as on 31st March 2022. And any further queries, you can approach me even after the call. Thank you.
Thank you, Medappa. Just to add that, you all know the tough year we had, not just with in the beginning the COVID situation, but subsequently the commodity issues and global headwinds in terms of some kind of a downtrend in the automotive business. With that background, I think Suprajit's performance of growing at about 13% and EBITDA still above 14%, I would think is a very satisfactory outcome. We continue to have these headwinds in this year, but I'm pretty sure that our team is working as usual to ensure that we'll get optimal results. So with this, I will hand it over to the moderator to start, collating the questions, and we will answer them as it comes. Thank you. Over to you, moderator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashin Modi from Equirus. Please go ahead.
Yeah. Am I audible?
Yes, you are. Thank you.
Yeah. Good morning, sir. Congratulations on decent set of numbers and on completion of LDC's acquisition. So my first question would be regarding the new products which you were developing at STC. We were testing them. We had them on testing. So could you give us a color on the current order book of STC and and now since we are setting up a new line for e-sorter and digital cluster, how is the orders over there?
Yeah, I'll just give a quick answer and then ask Mohan to give a little more detail. I think we did make an announcement that some time ago that we have received significant orders in excess of 100 crores for the STC products. And based on that kind of a comfort, we have now are setting up a small division of electronics, and that will go into production in, start production. I mean, we are already doing a small production in the Unit 3, but it will probably get streamlined in the next couple of months. I would say that there has been a significant progress, and we are making a fairly decent financial investment in terms of putting up this new division. So Mohan, can you please add on some of the products and our plans on STC?
Sure. Primarily, there are two specific areas where we have focused on. One is the digital instrument cluster area. And here, I think I did mention it in one of the earlier calls, that we are going in for what we call it as a platform approach. Therefore, we have developed what is called a Supra 1.0, 2.0, 2.5, and 3. These are different generations of instrument cluster, which would be available for the customers depending upon what level of technology they want to adopt into their own vehicle. Now, that has played out well, and we have got good amount of, I would say, orders also, and a lot of them we have already fitted, and it is also being tried out at ARII for homologation. So this is one stream that we are looking at, and here we are looking at both IC engines and also more heavily into EV also. So both the areas we are focusing on. Other than that, we are also developing one for a non-automotive segment, which is not here outside this country, which will be exported out. The second area where we are looking at is what we call it as a rotary sensor. This is a Hall effect sensor, which will be integrated with a specific mechanisms for what is called as the e-throttle control. E-throttle controls are what gets replaced with the throttle cable. Therefore, that's the reason that we are focusing on that, which incorporates a rotary sensor. So these are the two major areas. Purposely, we did not put in our investment till such time we get some traction from the marketplace and see how the market accepts these products, because we have developed these products, but commercialization of the product is when we put our lines there. Now that we are confident that the market is accepting this and there is good amount of interest generated in the market, we have decided to go ahead with our investment.
And to add to what Mohan has said, I think it's a very clear vision of our group that STC will be a very focused product development center for us. The idea is simple. In the next 3 to 5 years' time, Suprajit's intention and our clear aim is to ensure that our content per two-wheeler will be a lot more than what it is today. I think that is our intent.
Thanks a lot, sir. So my second question is regarding LDC. So you said that LDC operations are right now affected by this. So could you quantify the effect? And also, sir, on LDC, if we can talk about who are our global major competitors and what are their sizes, if we can talk about this.
Our competitors, you mean?
In the global market.
In the global market, yeah, okay.
Yeah,
in terms of the business, size? I think in terms of business, I think the same headwind that we faced and what Mohan elaborated, it applies to Kongsberg. I mean to LDC also. It's the same problems everywhere in the world. So their business had, last couple of years have had its own effects for whatever reason. And they probably had a business of about around 80 million last year. And I think we have sort of guided that in the next 2 years, between this year and next year, we should close the 100 million USD kind of a sales. I think that's what we have projected in our last statement. In terms of the competition, I think, the global major is the Hilux from Japan. I think probably Hilux and Suprajit are more or less in terms of at least the number of cables, we are on the same levels. And then, of course, there are other guys like, there is, Stahl Smith, there is Dura, there is GRC, there is WR Controls. There are a couple of cable players out of China. They are all in the range of, let me say, anywhere between 40 to, let's say, 100, 120 million, US kind of a size. So that is the competition, if you were to ask.
Okay, thanks a lot for my questions. Yeah, my questions are answered.
Thank you.
The next question is from the line of Mumkush Mandlesa from MK Global. Please go ahead.
Thank you so much for the opportunity, sir. So just on the last question for the STC business, so what will new revenue, incremental revenue? So last time you mentioned 100 crore. So what could be now new based on the order wins?
Yeah, I think, these orders are for the futuristic, from the day it starts commercial, the development time is there. Just to give you a rough idea, I think, Mohan, correct me if I'm wrong, I think we did about 10-15 crores of business from the STC products last year. I think we are hoping to do maybe about 30-40 crores in this year. And it probably double next year when our digital, electronics division goes into full stream. So that is the kind of a roadmap I would like to give.
Sure. Thank you. Sir, what would be the new outlook for FY23 or CY22 for LDC business on account of a conservative accounting standards and a China lockdown? So what could
Sorry, can you please repeat? I can't hear you properly.
Sorry. So what's a new outlook on LDC business for CY22 on account of conservative accounting standards and China lockdown?
Oh, I see. Okay. So in terms of business, I think I just mentioned that, our aim is to cross $100 million in the next 2 years. In terms of the margins, I think I would probably give a clarity in another quarter or maybe 2 because, we are still trying to assimilate different countries, accounts, standards, etc., etc. So it's a little premature to say, but what I've mentioned in our last business update is that the aim was to get into a double-digit EBITDA over the next 2 years' time. As we hit 100 million, we also want to hit 10% EBITDA. That is our target. Current years, you must realize that this acquisition is done with a lot of remote diligences, etc., etc. Travel was completely ruled out. So we need to see, in terms of the stocks, what is there, how is the kind of operating systems, what is the creditors and debtor situation. A lot of things will be sort of absorbed over a period of time. And there could be, I have to accept that there could be one-offs in this current year, but that's normal in any acquisitions. But our guideline is going forward in the next 2 years to hit double digit at the LDC.
Thank you. And sir, Sena has done well in FY22. So can you explain what drove the growth and what is the outlook for FY23, sir?
I think, we don't really give a forward-looking number. All I said, yes, Sena has done an excellent job last year of a good growth, as you would see. The Sena division between Unit 9 and Westcon has done nearly 20 plus, I think, % of growth. This year also we are expecting certainly a growth, a double-digit growth is expected. Margins, as Mohan was mentioning, again, global commodity is a big challenge. But we have been able to talk to our customers and, able to pass on some of them at least. So we continue to believe that the margins that we have been sort of clocking in the last couple of years is doable going forward as well.
Thank you so much for the opportunity.
Thank you. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for the opportunity and congrats for decent set of numbers in tough times.
Thank you.
Sir, my first question is related with the automotive cable business. So what is the reason? First question is related with the automotive cable business.
Okay.
What is the reason for the margin expansion in the core cable business? Is it because of the better revenue growth or from the four-wheeler and export?
You're talking about the automotive margin increase, is it?
Yeah.
I mean, it's from 15.9% we have grown to 16.3. It's a 0.4% increase on operational level, which can be due to any timing effect of a price increase, supplier price decrease, or increases or decreases, whatever it is. So I would only say that there is not really an increase in margin. It's a stable margin.
Okay. So how was the growth in the four-wheelers side, especially for the export?
Yeah, I think, simply, one of our main business is also in Europe. We grew our automotive exports by about 11%. And then I think when the Ukraine war hit, Ukraine was a big supplier of, I think, some of the components to automotive industry in Europe. There's a lot of disruption has happened. It is slowly starting to stabilize now. There's still some disruptions happening because customers had to relocate these suppliers into other parts of the world. So the general feeling, our own view is that this year global automotive, I'm talking about a very general term, it will not grow. If at all, it will probably degrow this year also. But having said that, I think because we have won businesses with customers and they're all getting into production, we will continue to grow our automotive cable business as well. Our overall guideline of saying that, we will outperform Indian automotive industry by 5 to 10%, which we have done by 10% this year. I think that is still a very much the guidance that we would like to give.
So as the export business will be under pressure, that will impact the overall margin of core cable business in the coming quarter?
No, I think typically automotive exports, particularly global automotive customers, don't really are easy to give any price increases, which is a very acceptable point. I think that's what you're driving at. But we have been able to convince some of our customers, and we're in the final stages of convincing another one or two key customers that, these price increases are not normal. They are much beyond the inflationary trend. So they have to index those prices. I think they have been able to, they have listened to us, and some of them even try to do some, test marketing to see whether somebody else can supply, but there is nobody else to supply. So the fact that we have been so strongly entrenched player in cable and we've been able to deliver wherever they want, I think we are heard in the right manner. And I think in the next couple of months, some of the price indexations will happen. And if there is going to be any further, let's say, supplier price increases, we'll be able to offset. So we are fairly comfortable to say, overall, we feel that there could be a timing effect of price increases and decreases at various places. But I think we will be able to do it. Having said that, if there's a major difference, we have made a comment in our press release that there could be some marginal pressure, but that is not going to be 5-6%. Maybe 0.5% here and there, 1%. Possible, we don't know. But our aim is to still guide what we have guided in the past.
Sir, how is the outlook for the domestic core cable business as rural demand is picking up well and there's a recovery in the entry level and scooter segment, which have a higher number of cables? So how do you see the positives in the domestic core cable business?
You must realize that in the last year, the two-wheeler industry actually degrew, as you know, because of the entry-level vehicles were not in demand. I'm not sure whether that scenario will change this year. This is very judgmental, but I think that, slackness, that tempered offtake in the market continues. So we are not really seeing a huge growth for two-wheelers per se in this year also. We also believe that the trend was similar in China, where it grew stupendously and went to something like 35-40 million two-wheelers, and now it has dropped off completely in the last few years. So having said that, I think we will continue to grow Indian cable business, whether it is through our ability to penetrate more into the two-wheeler customers, our ability to penetrate more into four-wheelers, and of course, the strong, presence we have in the aftermarket. So our belief is that we'll still grow our domestic cable business pretty well. As I again said, if industry grows at 5%, we should be able to grow at 10%.
So in domestic core cable business, have you won any business in the four-wheeler side, especially from the large OEMs like Maruti and others?
Maruti, as we have always said, I think we have not really talking about Maruti at all these days because our focus is not really, our focus is there, but as a tier one, we continue to supply to multiple customers, but not as a direct supplier to Maruti so far. But there is other businesses that we are winning as tier twos, as other customers like Mahindra, Tatas, etc., etc. And even as a tier ones of some of these Japanese and Korean suppliers. So we have our own strength in those areas. That's why I'm saying, I mean, instead of going into specific customers, we do believe that we will grow our domestic cable business based on whatever the market conditions are.
Okay. My next question is from the Phoenix Mills, Phoenix Lamp Division.
Okay.
So as you mentioned that you have taken a price hike in this quarter, despite that the revenue growth and the margin is quite muted. Just wanted to know what is the outlook.
No, I think you are looking at last year's quarter. I think what Mohan mentioned was in this quarter. That means the current year only we have got the price increases.
So how it will reflect in the first quarter numbers, sir?
We have got some price increases and we have increased the prices in the aftermarket. This all is correct, but still quite a few of the major customers are yet to give the price increases. So it will take little time. I think it will be happening this quarter and next quarter, and I'm pretty sure it will claw back some of the lost margins. As Mohan said earlier, I think it was a strategic decision not to ask for a price increase because we wanted to keep our market position intact. And that having been done, now we are looking at it. So in the next 2 quarters, we'll get certain price increases, which will, to some extent, certainly will offset the margin pressure that we have seen in the PLD, which is the one instance where our margins have actually decreased.
So can we see a double-digit sort of the margin in the PLD, sir?
I don't want to say anything about the double digit. I think we want to move forward from where we are now. I think probably by next quarter results, we will know clarity as to what price increases we are getting and how much we have got it. I think based on that, probably we can comment.
And sir, RM prices has gone down, is going down, especially for the steel prices. So will it positive impact on your margin in the coming quarter? Because 50% of total raw materials is steel.
See, I think there is a lot of news item in the last 1 week, thanks to all these certain curbs put by the government. But we have to see in the practically, we have to see in the operations of these companies how they are reducing the prices. If you ask me, have I received a price reduction from the steel suppliers? Not yet, because there is already a price increase of the past pending with us for settlement. So probably it will get set off to some extent. And let me also say this, if customer, the moment the price reduction actually happens, customer is at our doorsteps to ask for a price reduction too. So I don't think it will be a margin accretive. I think it will be margin neutral. If the prices come down, just as we got the price increases when it was going up, we'll also are bound to give the price reduction to customers as it goes down.
Oh, thank you, sir. Thank you. That's all from my side.
Thank you. The next question is from the line of Nikhil Kare from Axis Capital. Please go ahead.
Yeah, thank you for taking my question. My question was on the aftermarket side. Can you just talk about your market share on the aftermarket, both on the cables and the halogen side? And also, what is the pricing differential between us and the peers? So you mentioned that due to competitive reasons, strategic reasons, you did not take the price hike. But have peers also been aggressive and they have also kind of refrained from taking price hikes? So just some more color on the aftermarket side.
Mohan, will you give some color on the aftermarket?
Sure. Let me start with Phoenix. Phoenix, before I get into the aftermarket and the share of my aftermarket, I think if I tell you the capacity in India, then I lead to the aftermarket share. That would be an interesting way of looking at it.
Sure.
Today, we are having about 110 plus, almost about 112, 115 million bulbs capacity. Okay. And as against this, our nearest competitor would be at around 25 million bulbs. So you can see the stark difference between the capacity that we have. So which means what other things can happen? Other things is imports. Where do these imports happen? There are 2 areas that you can get bulbs coming into India. One is obviously China, another is Korea. Now with all the kind of container shortages and freight issues and also the price increases that are happening there, I would say that there has, and very, very, very important is the government's effort to streamline the economy. to make it more, I would say, clean economy. To that extent, I would say it is all playing in our favor in the Indian aftermarket for bulbs. That means capacity is in our favor, and the reduced imports are in our favor. So now I come to the market share as you are talking about. Market share, when I talk about market share, if I look at a relative market share and an absolute market share. Relative market share is with my brand of Phoenix. If I talk about my brand of Phoenix, I would be telling that probably I would be at around 60% market share. Ballpark number I'm talking about. But if I look at the absolute market share, there are other players selling in their brands, but I am the guy who is supplying it to them. So back-ended, it is my revenue, of course, with an added margin of theirs. Therefore, to that extent, when I look at an absolute market share, it is really, really very, very high. So this gives you a color into what is the kind of market share. Now, in moving on to the price differential between the peers, again here what happens is, that's why you remember I told that I am testing the price elasticity in the market. The reason I am able to test the price elasticity is because of my market position in my market. Because if I didn't have that position in the market, I always had to look behind and run ahead, because somebody is going to pick me in this race. Now today, the gap is so much that I think I can set my own pace and running forward. And that's what is happening. But having said that, there will be a level of pricing at which the market stops picking up the goods. They will say, okay, let me do without it, kind of stuff. Therefore, that is the reason I'm testing the pricing elasticity. Comparatively, if you look at the pecking order, Philips would be number one. Phoenix, we have moved up the ladder in terms of value chain. We are number two. Osram is number three. Then comes the rest of the other players. There are some niche players at both the top end and at the bottom end, but they are very small quantity players. Have I answered your question?
Yes, sure. But then, sir, just to take this point forward, given that we have such a strong market share position, I would have imagined that we would have had the ability to take price increases at a maybe a faster pace, given that we are one of the leaders here.
Point well taken. I told in the previous call, last quarter call, we were running a scheme. We run a aftermarket scheme which starts from 15th of August and runs all the way up to 26th January. That means Independence Day to Republic Day, for easy remembrance. Okay. So what happens is, when I'm running the scheme, if I'm going to go and touch the price, it upsets the market in a very big way. Therefore, I purposely did not want to touch the price in the aftermarket till 26th January. Now, once 26th January got over, I moved ahead and I made those corrections. Again, when you are making corrections, what will happen is, like what I said, testing pricing, the price elasticity in the market. How much are you going to increase it by? Are you going to increase it by 5%, 10%, 20%, 50%? So that is where, some business judgment should come in, where we will have to make certain moves. And I know to a certain extent, I as a leader would have to make the first move. Followed by me, I would be expecting others to make that move. But whatever happens, there would be a lag between me and the other followers making those price increases. During that period, there could be an erosion in volume for me. So I need to balance all these factors before making that decision.
Yeah, got it. And sir, similar color maybe about the auto cables aftermarket.
Yeah, automotive cables, again, we have a good pole position out there. Having said that, we can still definitely do much more. We are extremely strong in the southern region, to a certain extent good in western region. In the northern region is where we need to kind of, get into much more stronger position. And one of the reasons that when we go ahead and do these things is the way you are able to fulfill your dealer and distributor order positions. You will be able to get the order, but the question is how fast you react to the market. And that's the reason where we have put in our aftermarket fulfillment center. It's going to be a state of art with technology involved in it, where we will be able to, send goods across to various parts in India very quickly. Therefore, right now, if you ask me on a market share, I would say there are, cottage industry players. To a certain extent, it has come down, but I would very safely put my number at around 60% there.
Got it. So my second question was on you mentioned in the opening comments that there was some successful clawback on some cost overruns in China. So can you just throw some more light on that?
Yeah. You see, there are, when we classify the customers, there are different types of customers. We have, the bada customers and not so bada customers and the chota customers, right? Yeah. So what we do is with all the chota customers, we unilaterally go and increase the price. We say that, from such a date and onwards, our price is revised and our new pricing list is so and so. That we did as a first round. Second round is the middle, volume customers. With them also, we have been able to get the price increases. Our sales and marketing team has been successful. Now it comes to the bada customers. With the bada customers, with some, we have what we call as a LTA or long-term trade agreement or long-term purchase LTA, long-term purchase agreements. With them, it needs some amount of cajoling and convincing to tell them that this is what has happened, and therefore, in the best interest of keeping the supply chain alive, we would want you to support us in terms of price increase. And that is happening.
Got it. And just my last question, I think CapEx you have guided for 140 crore for this year. So if you could just maybe break it down for us, what would be this spent on, the project CapEx and maintenance CapEx details?
Yeah, Mohan, will you answer the question as well?
Sure. CapEx, I generally classify into three major categories. One category I call it as land and building. Again, split probably into land and building. But that ballpark is going to be, because last year, if you remember, I had brought in about 110 crores, which I said that it would be spread over 2 years. Therefore, there is a spillover of that 110 crores, which has come into this year. Therefore, optically, it looks as though it is 110 of last year plus 140. No, it is not. It is a spillover of last year, 110, plus a top-up, which is going to happen this year. Top-up primarily is coming because of my electronics area, where I am putting up a clean room. Rather, it has already come up now. The clean room is ready. And I have the machines have already come. The assembly line has already come. The assembly lines have already come. Now they are being, as we speak, are being installed. Therefore, my major, I would say, top-up line item this year is probably we might be looking at some land assets somewhere, which will aid our, I would say, land bank to expand. Other than that, it is going to be into electronics foray.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Virat Shah from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. Sir, I was looking at...
I'm sorry to interrupt you, Mr. Shah, but we are unable to hear you. Can you please speak louder?
Am I audible now?
Yes.
Hello? Yeah.
Yeah.
Yeah, congrats for good set of numbers, sir. So one question I had was on Sena. If I look at this quarter, YOY revenue growth is single digit. Is there anything to read into it? Because generally the recovery was reasonably well in the non-automotive market in US. So is there a base effect or anything else to look into it?
No, I think the answer for that is simple. I think we have mentioned in quite a few of the past conference calls. Westcon business is cyclical because the seasons of the green season and snow season, the products are spread out in different times. So I think the effect of that happens in certain quarters. So I think that is the reason why you see that difference. And I think there's nothing more to it, actually. The business is growing there, actually.
I was more looking at YOY because seasonality will be taken care of when you look at YOY.
Yeah, because what has also happened is that, the start of a green season, for example, starts sometimes much earlier or it gets spilled into the next year. So I think that's what is also happening. For example, the summer season or the green season, let us say if it is starting little late, because if they had last year's unsold stocks in their warehouses, they'll first sell it and start releasing the orders little later. So it gets spilled into the Q1 of ours, which is Q2 of theirs. So that is also the possibility that is the reason of it. Just a timing issue, I think.
The second question was on the new e-throttle product that you were mentioning. I couldn't catch it properly. Sorry for if you have to repeat. So it is a replacement of the throttle cable, right? That is what your intent is, and if I understood it correctly.
Yes, e-throttle. Sorry, go ahead. Complete your question.
Yeah. So how does the component mix look like? Is it more bought-out components involved over there, and also the value content? Is it similar in pricing, or initially it will be expensive, and if at all, how expensive it will be?
Oh, e-throttle is probably 10x the throttle cable. I mean, in e-throttle comes both with the cable and without a cable, the electronics mechanism. So I'll probably ask Mohan to elaborate a little more on this.
Yeah. In terms of the product value, obviously it is much, much higher, like the chairman was talking about. Let me just explain the product, then I think you will get clarity. E-throttle is basically a chip which is there, which is going to analyze the position of the throttle when you twist the throttle grip. The angle which you twist it is converted into a signal, and the signal is processed and sent across. Now, when you are doing it, there are two ways you can do it. Number one, you give IP67 level protection at the handle level, grip level itself. That means you make it much more robust in terms of its protection towards electromagnetic radiation, towards the weathering effect, etc. So you build all those factors at the handle level itself. This is, I would say, configuration 1. Configuration 2 is you just have the normal grip with a normal cable. The cable runs normally back either near to your IC engine or near to your motor controller, and you place this rotary sensor out there, because already there is a lot of, I would say, IP67 level protection given there. Therefore, you don't need to have a separate level of protection to be given here. Therefore, these are the two versions that we have developed, and this is what we have taken to the market and shown both the versions. In fact, I would not like to name that company or name that brand. A very, very, I would say, state-of-art, well-known EV brand. The CEO of the CTO of that was at our SPC. He was there, literally on his knees, checking out all our products, looking at how it is fitted and all those things. And he was complimenting our engineers and our team as to the kind of innovations that we have brought about. And one of them he talked about was this specific thing when we told that we have these two versions available.
So I presume the second version would be reasonably cheaper to the first version, right? Because
that is correct.
The integrated one.
Yes.
Yeah. And sir, is this everything you will be doing on your own the way you do the cable, or initially there will be a lot amount of bought-out components in this?
I think the product pricing will be done such a way that it will have a reasonable and in line with Suprajit's thinking of margins. There would be, of course, for example, a sensor would be, obviously bought out, but a lot of things are integrated internally itself. So it's a comprehensive product. In some of these products that we have developed, we even have an IP protection. So we expect, quite a few interesting things to happen in this space.
If I can squeeze in one last question. So on the braking products, we have been talking about it since a reasonable time. If you can throw some color, where are we in terms of acceptance, order flows, etc., and on how you're looking to ramp up the capacity over there?
Mohan, will you answer?
Sure. Look, first of all, we have to understand that we are talking about a safety product. braking being a safety product. For an OEM to switch over to a supplier, it's not going to be very easy. There is a lot of testing that needs to be done, proving which needs to be done, and it has to be extremely rigorous. And that's what we have done, because we also, again, don't want to jeopardize our fair name in the marketplace by just being in a hurry to bring something into the product. So to answer your question, it has been taking a lot of time. The answer is yes, because we want to be doubly sure that a safety product going out of the stable of Suprajit with our brand name carries the mark of quality that we can really be proud about. Now, getting the customers convinced takes time. There are two types of customers. One is the traditional customer who already has got certain supply chain with them. And then you have the newcomers who are coming. Now, with the newcomers, we are having some good traction. It is going to take, obviously, more time with the established players.
Yeah, thank you very much. And all the best.
Thank you.
Thank you. The next question is from the line of Shivam Prasad, an individual investor. Please go ahead.
Oh, am I audible, please?
I'm so sorry, sir. We cannot hear you.
Hello, am I audible?
Yes, sir. Please go ahead.
Yeah. Sir, I just want to ask that what percentage of your product folio is EV agnostic and what percentage of that is not EV agnostic? Can you give a highlight of a percentage on that?
Sorry, EV agnostic. I mean, product, is it?
Yeah. The product folio percentage that will be impacted if there is a full adoption in EV in the market. The percentage of your parts that will be impacted, or the revenue that will be impacted.
I can put it simply this way. In passenger cars, there is nothing that will be affected because of EV, because we have no products there. In fact, it will probably add to our product range as we see it. In two-wheeler, we just talked about throttle cable just a while ago with the thing. So, for example, throttle cable can be replaced with an electronic throttle control. That is possible. So that is where I think EV and non-EV will come into picture in a two-wheeler. The other product changes, for example, if you're going into hydraulic brake systems, obviously a brake cable will go away if it is preferred to have an hydraulic braking system because it works in a hose system. It is nothing to do with whether it is an EV or otherwise. But that is, different product altogether.
But can you give the percentage of how much is the revenue percentage of these two products in your folio?
I would say throttle cable is one of the 5 cables, yes. But it is not that all the EVs use electronic throttle, by the way. We supply to EV guys who are using usual mechanical cables also. So it is very difficult to give that percentage.
And sir, hydraulic brake also?
Again, hydraulic brake is generally popular beyond 175 cc onwards. Today, the volumes are in the lower level. So again, that depends upon how the markets will change.
So can
higher end hydraulic brakes are there. Yes.
Like from 5 to 10%, 10 to 20%, anything in the range?
It's difficult, no, because as I said, how do you say in motorcycle what is hydraulic? Because right now, 150 or 175 cc plus are having hydraulic brake systems. Not all of them, but some of them. So again, how the adoption is going to there, we don't know.
Okay, so any estimations also you don't have?
We have internal estimation. It is not for the market. That's why we have been working on various other products also.
Okay, sir. Okay. Thank you.
Thank you. The next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Yeah, hello. Am I audible?
Yes.
So, sir, most of the questions have been answered. And so just one question on STC. Are we also, especially on the digital speedometers, etc., are we also trying to get into four-wheelers, or it is largely for two-wheelers at this point of time?
At this point of time, it is for two-wheelers, it is for three-wheelers, it's also for non-automotive applications. We are not really, at the moment, focusing on passenger vehicles, but obviously it will be an obvious next step at an appropriate time as we grow this business and its understanding.
And would it be sort of fair to assume that as we get into products which are beyond cables, we will continue to hold on to our margin guidance of 14 to 16% at a consolidated level. I mean, would that be a fair assessment? I'm not talking about this year specifically, but
we are fairly clear with our STC products that it will also generate something similar. There may be an entry strategy different, but eventually a similar margin profile is what we are expecting and aspiring and working on.
Sure, sir. And just last question, sir, on our lamps business. A few calls back, we were talking about getting entry into the US market, given the overall sentiment against China, etc. Just wanted to get an update if we have moved forward on anything and if you would like to share anything.
US entry, of course, we are still working on the US entry strategies, but there have been certain very strongly entrenched players. The global majors are sitting pretty there, and they have got a fairly deep connectivity. It's not an easy thing to break in as such, but we continue to make our effort. What has happened in the meantime is that, there are two, we've got multiple strategies. One of the other strategies that we had was to enter Russia of all the places in this current situation. And we won some businesses. And then the war broke out, of course, and, these things happen. So our export strategy at, Phoenix Lamps is taking strong roots, but there are some disruptions. As I said, we have few large orders coming in from Russia in the last quarter of last year, but then now, they are getting into some limbo, and hopefully we'll find some resolution to that soon. So there's ups and downs. The market is pretty tough, but we'll continue to grow. But entry into US will take more time.
Got it. And so, sorry, just one more extension on lamps. So Blacklight and Prepa have been facing a lot of headwinds over the last many years now. So just wanted to get your sense, what is our thinking around that? We have tried a lot of things and we've restructured it, but the headwinds continue to just keep on growing. So just wanted to...
Yeah, I agree. I think it's a valid point. In fact, we are also reassessing the situation again, I must say. But the point is simple. I think it's been a market where there has been quite a bit of competition. The competition was operating without a full presence in Europe, and we are competing with a full presence in Europe. That adds to the cost. So we are trying to see how we can mitigate that. Of course, we have restructured, as you rightly said. I guess there is some more work to do, and I'm sure we will be working on it soon.
Fair enough, sir. Thank you very much, and all the very best.
Thank you. And moderator, it's 12 o'clock. We'll probably take maybe one more question.
Thank you.
It's already 1 hour. Yeah.
Ladies and gentlemen, this will be the last question, which is from the line of Ronak Vora from Om Advisors. Please go ahead.
Hello, sir. Sir, on the Phoenix Lamp division, you said that our market share is 60% and, our capacities are around 110 to 115 million bulbs, whereas the second player has around 25 million bulbs, correct?
Yes, I think that is the Indian manufacturing capacity, but there are a lot of imports also, you must realize.
Okay, so...
This is the India manufacturing capacity, is right, correct.
Okay. So in imports, don't we see any supply chain constraints for the Phoenix Lamps division?
Yeah, I think imports, as I think Mohan mentioned, there is a constraint. It is more expensive. It takes more time. That's why we have augmented our position in the aftermarket in India strongly. That's also one of the reasons.
But due to these challenges, wouldn't be a benefit to you, and you can straight away take price hikes to mitigate the margin pressure?
Yeah, but at some point the imports become cheaper, no? There is a fine balance, right? So we can increase so much, and after some time elasticity doesn't exist. So we've been testing the market, as Mohan said. We have done one small price increase last year end, and then we have done one more this year. We will see how it is and how, at what price it becomes easier for people to import. So it's a kind of testing the markets at the moment. But we have increased the price in this quarter.
Okay,
and it seems to be okay.
Is it like our prices are at par with the import prices, or we are at
we don't want to go into the pricing positioning in the market. It's much more complex than that. So Now, pricing situation, we don't want to discuss in the open forum. But
no, on an average, just to get an idea.
No, but it's not only the pricing, it's also brand. I mean, if Philips can bring it and sell it at 20% higher than us, then they can still sell. But somebody else cannot do it. So the positioning also is important.
Okay. Thank you.
Thank you.
Yeah. Thank you.
Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Yeah. Thank you all for your continued interest and questions on Suprajit. As I said, it has been a tough year, but we still think that we had a good year going forward as well. Our current year expectations also continues to be a decent and a strong growth, and we believe that LDC will bring a lot more new businesses for us and will be a strong integrated global supplier of cables. And we are working on all the divisions pretty confidently that despite the difficult times, will turn out to be another decent year for this current year as well. Thank you all for your interest, and I now hand it back to the moderator. Thank you, and have a good day.
Thank you. On behalf of Anand Rathi Share and Stock Brokers, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.